So in this video, I'm going to take you through the most simple and mechanical way of mapping out structure. So I keep it very simple and I look at two key components when I'm looking at structure. I basically have major structure, which is the same as your swing structure. So this is going to help you determine whether you are in a uptrend or a downtrend. Now the other component I have is minor structure. So I have an example of minor structure here, and all minor structure is abracadabra. It's what happens inside of your swing trend. So of course on the real life markets, price doesn't just move up and down like the clean red lines. You have a lot more messy price action happening within the trend, which looks a bit more like this. Now I don't trade the minor structure trend because you can see that it changes quite a lot. You are bullish here, then it goes bearish, bullish, and it constantly changes. But what I do use it for is confirmation. So what is the confirmation for? Confirmation is to determine what our overall trend phase is. So of course we have bullish and bearish markets. But apart from that, we also have trend phases. So I mainly look at two phases, a trending phase and a retracement phase. Now there are many names for this, so you can use whatever you want: impulse, correction, accumulation, distribution, I don't know, there's so many different terms, but essentially the way I look at it is the market is either trending, so it's moving with the overall trend. In this case, price is bullish. So each time it moves up, we are in the trending phase. And when you have a retracement, it's when you're having these downward movements. So when we are moving down during these phases, we are not bearish. The overall trend is still in line. We are still staying within the highs and lows of the overall trend. However, when we have this downward movement, it is simply a temporary retracement. So that's where the minor structure confirmation comes in, because the swing trend is the highs and lows. But the minor structure will help us determine whether we are in the trending phase or we are about to start or complete a retracement phase. So let's dive a little bit deeper into how we can differentiate between whether we are in the trending phase or if we are having a retracement. So like I said, the real life markets obviously doesn't move in straight lines like this. It looks a bit more like this. So the minor structure makes up our overall major or swing structure. So within this overall, let's say this was our high and low in the market. Within that, you are going to have this movement, which is your minor structure. So as you can see, the minor structure is also creating highs and lows. However, when you reach the swing high and the swing structure, what you have here is a break. And this is simply not a trend shift. We are not bearish. This is just the start of your retracement. When you have a break in minor structure, it is the start of your retracement. So it's the start of this phase. And this is the mechanical way that we can confirm that this move is starting. When you have that break and price starts going lower temporarily. However, you can see eventually we have another break in the minor structure. This is important that you understand that the minor structure is what causes the overall swing moves to happen. So when that break happens, we create that swing low. Then price continues to move up. It's moving up because the overall trend is bullish and we need to create that new swing high in the market. After that new high is created, we know that a retracement needs to happen. How do we know when that is going to start? We can use a mechanical way by waiting for a break on the minor structure. When that happens, we know that most likely this retracement move is about to begin. So when that break happens, you see price starts moving down, we have the retracement phase. And then once again, you get a break on the minor structure and price starts moving up again with the overall trend and creating a new swing high. So once again, just to make sure that it's all making sense, you have the swing trend, which is highs and lows, or lows and lower highs if you're in a bearish trend. Then you have minor structure, which essentially gives you confirmation of if you are going to have a retracement or you're going to be trading with the overall trend. And that's all there is. Everything else that happens in between here, I don't really care about, because you're going to be getting low probability trades. You're going to be too aggressive. This model here is conservative and stays focused on the overall swing trend. And this is going to give you high probability trades and help you avoid or getting stuck in consolidation or false breakouts. So I want to use this theory of simply looking at the trend or retracement phase on the live markets. So I have here GU on the 4-hour time frame. And the first thing you want to do is just look at a very clear high or low in the market. So if you are marking out your structure, you don't want to start somewhere in here, because that's just messy and you're going to get lost and confused. You want to start somewhere where it's very clear, obvious high or low in the market. Now, obviously, this is our current date, right? So if I was doing my analysis in real time, I would start somewhere close by, right? If I'm trading on, well, it's November right now, I'm not going to be looking at price action from all the way in April. But just because I want to give you guys the examples, obviously, then I will go back a bit further than I normally do. And I start at this low over here, okay? So because we are starting here, we already know that this is going to be our swing low in the market. Now we want to look at our minor structure. So like I said, you just want to identify the point at where that minor structure was broken. So it was continuously moving higher and higher. However, you can see here, that is where the first break happened. This high was lower than this high, right? And then you had the break and price started going down. So simply put, this is going to be our previous swing high. So we can mark this break over here, and this is our swing breakup structure. So now we are expecting to create higher highs, right? So after this break, we know that price is moving up in the trending phase, but we want to know when the retracement is happening. When the retracement starts, we know that a high is being created in the market. So what was our rule for identifying a retracement? You look for a minor low to get broken. So we see that price was pushing up, pushing up, pushing up, and then we had a break of a minor low right over here. That means we can confirm that this was a high. So I'm just going to delete this to be clean. But after we mark a high, you're waiting for a break of structure again, and I use candle body close. That means the body of the candle has to close above our break of structure in order for it to be valid. So if it's just the wick, then we consider that a sweep. It's not strong enough to actually break price, and therefore we ignore it. In this case, we had a body close, so that it's a valid break of structure. And what is the last minor structure is over here. However, price pushes up there and then comes down and it goes higher. So that makes this the last minor low. So you want to keep following price like that until eventually you get a break of the minor low, which happens here, and that gives us a new high. After we get a new high, you can also mark the last low, because between this high and this high, the lowest point in the market was over here. So I hope that makes sense. If it doesn't, keep watching, because I'm going to just keep marking this, and the more you see it, the more it will start to make sense. So we confirmed this is a high in the market. What you'd just be waiting for is a break of that high, which happens over here. When you get the break, what was the last minor low was over here. So this means that the retracement phase, the price moving up, after that break, you see that price started to retrace, move down, right? Doesn't mean we're bearish, it is just a temporary retracement. After we get the confirmation that the retracement is happening, then we can mark the new high. When we mark a new high, we can look at the previous high and the new high. What was the lowest point between these two? It was over here. And in case you are struggling with this to begin with, because it can happen, you can just get your rectangle tool and draw it from the previous high and the new high, right? And then just draw your rectangle to see what was the lowest point that price reached in between these two candles. And that is over here, of course. So that's like the very basic, clear way of finding your highs and lows. In case you're struggling, you can use that trick. Now let's continue. So after you confirm the high, you're waiting simply for a break of either the high or the low. But because we are in an uptrend, we are expecting the high to get broken. However, you can see in this case, something interesting happens. Price comes and it does reach the low in the market. However, remember I said we wait for candle close for a break of structure. This is just the wick. So all this is a sweep in the market, but we will talk about that in later lessons. But essentially, this is not a valid break of structure. So you can ignore this and we get a candle close up here. So the bullish structure is still intact over here. Now price is moving up. Where was the last low? Over here. It doesn't get reached. Price just moves up higher, right? So every time the minor structure, and again, the minor structure is everything that is happening in between your swing points, okay? So every time, after the break of structure, so this was the last move, and then you get a new high. So then you look at the last minor low until it gets broken. So price comes down and it pushes up higher, then that is the new minor low. And you can see the wick over here breaks that. So when you have minor structure, you can look at the wicks. They count. The wicks count. You don't need a body close, but that is only for minor structures. So in this case, the wicks there. That means this is the new high in the market. After the new high, you can obviously go back and we mark that new low. So, of course, this is where we get interesting price action because this is consolidation, right? This is messy. And this is why this mechanical method is useful because it's going to help you avoid getting trapped in this messy price action. Like I said, this was the minor low that we're looking to break. However, look, if I draw a rectangle like this, you'll see that we just had consolidation within this range, and all that you're waiting for is an actual body close of that high. When that happens, you see it's all the way over here. Now we start moving with the overall trend. So thanks to using that conservative rule, you would have avoided getting trapped in any of this consolidation and noise. So once again, after that high, what is the low? It's actually right here, and then that gets broken on the next candle. So that is the new high in the market. And then once you create a new high, you mark the lowest point, which is over here. Again, that just gets wicked. We don't break it. So that is just a sweep of the low. Usually after a sweep, you see price moves up with the actual trend, and then we get the high gets broken over here. So we are still following our overall bullish trend. So after we break that high, we push up over here. What was the last minor low? It was over here, but then price comes down, pushes up higher, right? And then it comes down and continues to push up higher. So every time it pushes up higher, you look again at what is the new most recent minor low. So you want to follow the most recent structure when you're looking at minor structure. That happens here, and then you get the break. When you get the break, that's when you mark the high, and you know that this is the retracement phase. When you mark the high, you can mark the new low, price retraces, and it stays within the high and low of the market until you eventually get a break on the high. After the high, the most recent minor structure is over here, okay? And you see that was the high. Again, this is why this method is so good. You get to ignore all of this consolidation because price didn't take out that high until over here, but that is just a sweep. What happened after that? We finally take out the minor low over here, which means that we can confirm that this is the high in the market. After we draw our high, oops, that's the high. After we mark our high, we can also mark the low in the market. Then you just wait to see which one gets broken. Since we're in the bullish trend, the high gets broken over here. You can see again that is just a wick, which is a sweep. We don't care about that. We ignore it. We wait for the body close. Price comes up here. What was the low? So whenever you have maybe some tricky price action like this, I use this setting on TradingView, which gives me the open, high, low, close, basically the price of the candlestick. So if I hover, in line with this candlestick, you'll see up here, just watch what the low price, this price says, okay? So it says 328. If I go to the next candle, it says 330. So it just means that instead of like zooming in very close, you can just very quickly hover over them and see which one was the lowest. But basically, we're still going down, which means this candle was the lowest point in minor structure. That gets broken over here. When that gets broken, you draw in the high. When you have the high, you can draw in the low in the market. And this time you can see that before we had a chance to break this high, we actually broke the low in the market. And we had candle close. And this is the start of our trend shift. So we were bullish all this time. And now we are breaking down and creating a low in the market. So this is a swing trend shift. And now I'll just do a few examples so you can get an idea of how the bearish trend works as well. Going to look at the last minor high in the market that didn't get swept. And this was a low, of course. Now, let's say this is our minor structure range. Price is just sort of messy in here until eventually we go lower over here, which means, this is the minor structures going down. That was the last minor high. When that minor high gets broken, we know that the retracement is beginning. So we are in a bearish trend like this, which means, of course, after create that low, what needs to happen? A temporary retracement before you create a new low. So this is the temporary retracement. When that is signified with that minor break, you can draw in the low and then you wait for a break of that low, which happens over here. When that break happens, you can draw in the high over there. So let's clean this up. Now, what happens here is that this bearish move doesn't actually stay very long. this was the minor high again, which got broken. When that breaks, we confirm the low in the market. However, you can see that it doesn't get broken. Instead, price continues with the overall bullish trend again. We have a trend shift and we go bullish, and price continues to move up. This is the minor low in the market, and that was the high. However, this didn't get broken, so we just continue moving up until the last minor low is broken over here. That's when you can draw in the new high. So I'll delete this. So now this is our new swing range. So yeah, of course you'll have different sizes. You got a really tiny range here, you got a very overextended range here, but we stay mechanical. Pullback is confirmed over here, so we're waiting for a break. Break happens over here, and again this is like a very strong bullish trend, so we're moving quite impulsively and not taking out the minor lows over here. We keep pushing up higher until eventually take out the minor low right there. I hope this is becoming very obvious to you now. Then you mark the previous low, so I hope it's going to become easy for you to do this on your own. This was the minor low, got broken. That is the new high. It's the low in the market. And then again, we have a trend shift because that gets broken. Now we're looking for minor highs to get broken again. That never happens. Price continues moving down lower. Then that is the new minor high, which gets swept over there, which means we can confirm this is the low. When that low gets broken over here, this is the new or last high. That is the minor high over here. Price comes down, never sweeps that, goes lower. Consolidation, messiness, comes lower. Finally sweeps the high over there. So that is the low. Wait for the break of that low, which happens here. What was the highest point before this break? It was here. This is the new minor high. Price comes down, actually breaks down lower. So then that is the latest minor high. That gets broken. Oops. That gets broken, so we can confirm this is the low. However, the bearish trend ends here, and we can see that price broke the high over here, so we flipped back to bullish. So I hope that makes a bit more sense on how we draw our swing structure in a mechanical way while using the minor structure, so what is happening inside, to determine whether we're going to start a pullback or a tracement, or when we are following the overall trend. So maybe watch this video a few times, but the most helpful thing will be to go onto the chart yourself and try it out yourself. So just pick a pair or any time frame. The high time frames are usually much cleaner. So I would say when you're first practicing, look at the daily or the 4-hour. Something like the 15, if I just up down, is way more messy because your minor structure is going to have a lot more, break. Like it's going to be quite confusing. So start with the higher time frames. And feel free to send me your charts in the server so that I can just double check and highlight any mistakes. But I think it's definitely something that makes more sense once you put some practice into it. And with some experience, it should be very easy and quick for you to do. And like I said again, it's mechanical. So every time you do it, your markups will be the same. And the end goal is that we should all have completely identical markups when we're doing our structure mapping. So I hope you enjoyed the first video in this series, and I'll see you in the next video.